Ladies and gentlemen, Keaton here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 0.4% there. On the S&P Nasdaq, 1.1%, semiconductor 1.6%, Dow slightly green, Russell 2000 0.5% in negative. Transport and banks pretty much same today. Energy made a move about 2.7% positive on this slightly red day today. Biotech slightly green, healthcare similar. Home builders down about 1%. Utilities up little bit. Retail down, emerging market down, Bitcoin down. Gold, silver miners making a little bit of move after getting plunged for days and weeks. Dollar slightly red, oil up, treasury bond down, VIX is down about 5% there. Let's look at the S&P 500 ETF. Spider 65-minute chart here. So this is where we closed on Friday, and it looks like we slightly gapped down here. You can see this is where we opened up this morning. So we saw a little bit of down gap this morning. Quickly got filled though. That's a good thing. But really all throughout the day we've been grinding. You can see the first hour fluctuation, the second hour, third hour. You can see that on that today's price action. There's a key moving averages we talked about last week. We got the short-term moving average coming down, acting as what? Resistance. And we got the micro-term moving average acting as what? Support. Entire day today. And so you can see we're pretty much sandwiched in between the short-term moving average at the top and the micro-term moving average at the bottom here. And you can see on a fourth and fifth hour, bulls made a run for that. You can see at one point on that fifth hour, bulls really trying to escape that short-term moving average. They made a run for it right there, as you can see, trying to escape that boundary of the short-term moving average. And the bears caught them running out of the prison cell, shoot it down. That's what happened on the 6th hour there. You can see last couple days, we've been in this range bound. This is not a mistake. This is not a coincidence. It's not an accident. This is not a random occurrence that we are kind of bound by the short-term moving average and the micro-term moving average, trying really, really hard here to support the buyers. So going into tomorrow, obviously, if you're a buyer here, if you're desperately seeking higher prices tomorrow, well, you really want to see that micro-term moving average continue to support the buyers. You can see micro-term did act as resistance pretty much all throughout the first couple weeks of month of May this month. And this is first time we're seeing a little bit of that support for the buyers in the micro-term. Keep in mind, the micro-term moving average can flip back and forth pretty quickly. That's what it is called, a micro-term. So at the end of the day, what the bulls need to do is really need to reclaim that short-term moving average. They trying to do that on the 5th hour today, got failed, rejected. They need to retry and reclaim that short-term moving average and start using that short-term as new support. And that's the only way for the bulls kind of get up there, 405 or 410 or so. But if we start to lose that micro term, well, bears are gonna come and they're gonna come very, very fast, and they're gonna try to fill this up gap that was opened up just about last Thursday, right? So if there's an event tomorrow that bears start to come fast and furiously tomorrow morning or something like that, if they do come, bulls must protect this up gap. The worst case scenario, bulls need to, protect at least 50% or more of that up gap that was opened up last Thursday if they want to survive this month of May. Bulls can protect this up gap, at least 50% of it. There's a good chance that bulls can kind of make a way to the top. So if you're a seller here, your first objective, if you're a bear, your first objective to get down as quickly as possible and fill the entirety of this up gap as quickly as possible. Let's check out that oscillator, see if we can extract any more information. So that oscillator, we've been talking about this kind of a, you know, peculiar setup here. You can see market has been tanking pretty hard, but that oscillator has been cultivating these higher lows, potentially macho, mega, ultimate reversal signal of some sort, but it's difficult to say as of today. And that's still going on here. And today move right there, you can see we're pretty much moving sideways. We haven't really crossed down. We haven't really crossed up. That tells us it's basically this oscillator is already aware of the battle going on right now. You can see the short-term moving average is supporting the bears, and then we got the micro-term moving average supporting the buyers. So the oscillator is gonna hang around here until they can see which way the price is gonna break. But keep in mind though, last time this is a vicinity when bulls weren't able to, you see right there, when bulls weren't able to bring that oscillator all the way to the top of his band, real severe tankage came about into the market for like a whole entire month with a little bit of pop along the way. We're back at that level right here. You can see that's exactly same level. What the buyers need to do, they need to bring this oscillator all the way to the top of his band, hit that ceiling, and in that process get up and fill that down gap that was opened up back in May 9th and go up and retest that midterm moving average one more time. And that's what the bulls need to do in the coming days. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and go trading tomorrow.